Hi everyone, and welcome to Trades of the Week with myself and, as you know, our amazing Keith Sullivan. And today we're going to speak about some really big news in the market. We're going to speak about BlackRock entering potentially one of the biggest news, I guess, in cryptos in a very long time. So find out today what's happening with that. And not only that, MasterCard is partnering with the biggest exchange in the world, which is Binance, and they're rolling out something very special as well. And what does all this mean for cryptos? Well, that's what you're going to find out in today's episode. And before we start, I have a really big announcement to make. If you are interested in getting started with cryptos and really getting live updates, getting exclusive content, you need to join our private Facebook group. So do make sure you click the link below, join our Investment Mastery private Facebook group, where you will get live market updates on a weekly basis, together with the crypto of the week, the trade of the week, so you can stay ahead of the game and also take part in other exclusive content. So without any further ado, make sure you press the link below to join our private Facebook group. So with that being said, let's jump into it. I think both me and Keith are very eager to go. Well, I mean, we have mixed feelings. I'm going to tell you that. But that being said, let's jump into it. So ACI finally up a little bit in profit here, which is good to see. So we were close to be stopped out, but this is why we're taking the emotions out to really let it run. And now who knows what's going to happen. But that being said, no emotions. What we have done here is also we have got stopped out with a 3% profit, which is good news. Let's hear a moo, Keith. Are you ready?
Yeah, moo.
It was a long time ago, but we have been practicing. And we have two boos as well. One of them is KRTX. And this is what could happen. Write this down. With therapeutical companies, this can happen. This is why we do avoid staying in during earnings, especially if you are new. Now, when you get more advanced, like we to some extent are, we've been doing this for a while, and you see that usually nothing happens during earnings, you could stay in, but it does leave room for a big part of uncertainty, and this could be the result. Fortunately, this time we got stopped out with a 1% loss. So that's not a moo, Keith. That is a boo. But not only that, we also have this happening. This is also another therapeutic company. A few days before earnings, it gapped up, took us out at a 3.8% loss. And sometimes it gaps in your favor. Sometimes it goes against you. Same there. It was close to earnings, but this is the market. This does happen. So the big note to take here could be to avoid therapeutical companies. But next time, it might gap in your direction. Good to remember that as well. So this is another boo, Keith. A big boo on this one. Are you ready?
Yeah. Boo.
No, that's not good. All right. And then actually, we're still in these. Coty, it's going down a little bit, which is nice. We're around the entry points. Do your research, and maybe you can get in at a better price than we have. And then MRCY, the same here, also has gapped down, taken us out at a 2% loss. So we have a big week this week with a lot of losses, but we have no emotions because we know it will come back. Same here around earnings. So then these things can happen as we have gone through now. So do make sure you avoid earnings. Maybe don't enter if there's less than 2 weeks to earnings, just to be on the safe side. So with that being said, let's hear another boo, Keith.
Boo.
But before we look at the two new ones, let's go into a quick market update as well. What is happening in the market?
Yeah, so in regards to the market, obviously we touched upon it last week about two major announcements that were going to come out when it comes to non-farm payroll and jobless claims. And we were going to see, did these news announcements really back up what Jerome Powell in the Federal Reserve said about having a strong labor market? And I can say it did, because we are seeing increasing in jobs by the non-farm payroll. Even though it might be slowing down a tiny bit, they're still increasing jobs above analyst predictions. And also we're seeing unemployment rate beginning to drop. So we can actually take it with a pinch of salt what Jerome Powell said. And when he went, we are not in a recession because we have a strong labor market. then we're seeing that right now with the non-farm payroll and unemployment. So that is a bit of a positive news because we may see the market react positively and actually push up. The next thing that I really want to touch upon, as Dennis said, is trading near earnings is very, very risky, especially during this time where we're seeing a lot more revisiting earnings, okay, where they're looking at the earnings and going, right, we're now seeing narrowing margins. We are in a recession. What is earnings going to look like in the next quarter to the next 2 quarters? But we also see a lot of companies beating analyst predictions, and this is why we're seeing a lot more of the gaps. So gaps on the upside with the pharmaceutical companies, and even gaps on the downside with some of the other companies that you may be trading. So the only thing that I could really put out there is trading near earnings is very, very risky because it does 2 things. It, number one, increases volatility of the stock, which means the market can change its direction based on the earnings. And number 2, it can gap, like we have seen, where we actually lose more than that 1%. So please be aware and not just jump into earnings because you think it's going to go in your direction. Think logically and go, okay, what has earnings done previously, or do I really want to take that risk on? So the last thing that I really want to touch upon is obviously earnings is looking positive. The employment status is looking positive. So we are seeing a bit more of a push up in the market. But we really have to sit there and ask ourselves, are we actually in a recession? Because a recessionary environment stipulates that, okay, yes, the terminology is if we see 2 negative GDP quarter after quarter, that is a term for a recession. But if we have got strong labor market, we're now seeing consumer sentiment increasing, and we're also seeing positive earnings, that is not showing us what we would normally see in a recessionary environment. We would naturally see job market collapsing. We'd naturally see earnings all being negative for companies. And we are not seeing that. So that's given us a bit more confidence that we could potentially be seeing the market having a bit more of a push up. Okay. And it might not be a short-term relief rally. It might be a bit of a medium-term correction before the market then makes its decision. So they're the kind of areas that we've been looking at. Now, the main thing for your trading and investing is if you are investing and the market has gone up, it is time to look at potentially taking profits. But also, when you are trading, number one, make sure you watch out for earnings because you've seen what's happened. And number 2, let's make sure you're hedged. Okay, so you're doing longs and shorts because we don't really know right now where the market can turn, but we need to take advantage of this short-term or medium-term rally, whichever we will see, because now we're going to start taking profits, especially with our VCAs where we've been accumulating for such a long time. So yeah, Dennis, that's pretty much the news. Anything else to add on that?
No, not really. I think that's a good summary, Keith. And I think that the market is bullish at the moment. I want to have just a quick look at the US 100 here. And we'll see, we did break this. Let's actually remove these here. So we did break this key level here of resistance, at least in the shorter term. But currently, we are at a resistance as well. So currently, we are hovering sideways a little bit in the overall market. So we'll see what's going to happen now. And for that reason, we always need to be hedged. But as long as we are printing higher highs and higher lows in the market, then it's very probable to keep going higher. So in the shorter time frame, we are trading within this range here, so keep an eye on that. And it does seem like we will have a positive breakout this time, especially since we got certainty in the market. We know we're in a recession, hopefully not as bad as some people might say. And secondly, we know that they raised interest as well. And not only that, we got some really good earnings coming out from companies that might have to do with inflation, that the numbers are not corrected, but we will see that over the next couple of months. But for the foreseeable future or until next week, we are bullish on the market. So, but we'll see what happens. And we do have some short positions we're in. But this week, we want to add 2 companies. Number 1 is AT&T. So T is the ticker, which is a good company. We have a really good reward risk ratio. Earnings has been, and you saw it was a big drop in the market. And the probability is fairly high, I would say, that we will bounce around this level. So we will see. But that being said as well, what do you think? What do you think about AT&T, Keith? Do you think we should enter now, or should we be waiting for something?
Yeah, so if we're looking at Dennis's stipulation of entering, we would want to wait for a green candle because yesterday we had a bit of a sell-off. But we are looking really like it is a bullish movement. The main thing that I'm looking at is the bounce, Dennis, that you can see on the level of support, and then it pushed up and then it's retested that support. That there is a short-term resistance. So a bit higher.
Oh, you mean this one?
There we go. Yeah, that's a short-term resistance that for me personally, if once we are trading, if it breaks above that, that's given us really strong confirmation that this market now has the potential to push higher. So I do like AT&T, good risk to reward ratio. So it's now just waiting for that green candle and then seeing, does the market pass that short-term resistance?
Yeah, so keep an eye on this resistance here. I think that could really support in pushing the price higher, as Keith is saying. The second one is MRK, that's Merck and Company Inc. We've been in this numerous times before, and I think this one looks like a good opportunity. It was down to resistance. Now the market is pushing higher, which is nice. So this is the second one when it's around the entry point. We calculated on yesterday's candle, the 5th of August. And it was not the 5th of August yesterday, but not yesterday, but sorry, Friday's candle. We calculated on that. So now we have a good reward risk ratio on this one as well. So do your own research. But two good opportunities for you there to do your research on. So now let's jump into cryptos. I mean, there's not too much to say with cryptos, except that we are kind of bullish, and there's a few points that's driven the market higher. Now, one of them is that CoinBase announced their partnership with BlackRock. So BlackRock now are able to onboard institutional clients in a bigger scale. And listen to this, right? That if only BlackRock would add 0.5% of the money, because they manage hundreds of institutional clients, if not thousands. And if they just allocate 0.5% of the money they have under management, that will mean that an additional trillion, this is 0.5%. That means that another trillion will go into the crypto market, which is huge. Imagine if bigger institutions would do this, and we think it's just a matter of time. So this is why we are so bullish on cryptos longer term, of course. And not only that, MasterCard has now partnered with Binance to roll out a new crypto card. And this is also bullish, right? Would MasterCard, would BlackRock do this if they did not believe in cryptos longer term? So it is an asset that is definitely here to stay, we believe. So with that being said, we do have some, and it might be that we might see some more downside, but I think that's pushed the price up in the shorter term at least. But that being said, if we look here at the shorter term, currently we are seeing the same with Bitcoin here, printing higher highs and higher lows, which is nice to see. And we have actually created an ascending triangle, and 70% of the time or so, this usually does break up to the upside. So we do think that this is very likely, and that the target is probably going to be in this area over here somewhere. So around 30,000 or so. So that's another 25% rise in price. So we'll keep you updated with that as well. Is there anything you would add there on the news side, Keith?
No, so as Dennis said, I think we're seeing really positive news in regards to integration with institutions. Because the biggest challenge that institutions have is they didn't really have a gateway into the crypto market. And now Coinbase has opened that door for BlackRock as that gateway. And that is positive because they're seeing that there is potential here, especially with some of the larger coins like Bitcoin, like Ethereum. They're seeing real future in this, because if the institutions didn't see a future in this market, they wouldn't open it to these wealthy individuals. So therefore, I believe this is really, really positive, and we could see a real positive reaction to the market. Now, are we going to say it's going to cause the market to make brand new all-time highs? No. Okay.
Yes. No.
Well, okay. So if we go with Dennis, he says yes, but right now, do not base everything on news. Don't run on something known as FOMO, fear of missing out. Okay. News is naturally priced into the market beforehand as well. So we are seeing positive movements. All we need to do now is that we've accumulated. So now as the market is rallying back up and going above our average cost, it's then time for us to start looking at taking profits. But overall, I say really positive news with BlackRock. And I think it's the first of many. I think a lot more institutions are really going to take that step into the crypto market there, Dennis.
No, I totally agree. And the projects we're looking at, as you know, is Bitcoin. It's Solana, which is down quite a bit as well. So they're all forming this kind of higher highs and higher lows. And it's looking to get ready for a breakout, which is really nice. So we'll see if that plays out, but don't go crazy. Don't mortgage your house. Follow the strategies. And you can even invest a little bit on a monthly basis, right? That's a very simple strategy, which is a dollar cost averaging strategy. And then another piece of news that might come out in September is the merge, the Ethereum stepping up to becoming the 2.0. And that might, of course, also be another part of might drive the prices higher. So look at these bigger ones, and that's what we're doing. See if we can accumulate into those a bit more. Near Protocol is another one that's very exciting, down 72% from the high. Now, that being said, I think that's it for cryptos, but those are major announcements. So look over your portfolio and see what you want to invest into. Binance just also got into a partnership with MasterCard, right? And that has also got the price to go higher. So if you invested at minus 52, 62, and 72, you would very likely be up roughly 39% or so. So well done for that. But that's also one to look into if you haven't kind of gotten into BNB. It's one that we are looking closely at as well, because it's the native currency of Binance. Filecoin is another one we invested into, all the way down to minus 95%. It's really jumped up, but we are quite a bit from being around break even, which is somewhere around this point here. So we're going to map that out for you as well. And since the market has been quite bullish, if we segue over to the VCAs, we can see that with Pacey, we have the stop loss placed at plus 15%, which is great, but there's no time for moving, Keith. I know you're getting ready, but not time yet. We have been eating a lot of Mexican food, so this is up. So we have a stop loss at 20% as well. And for Medifast, we have another entry at minus 40%. So if you're in this, have a look at that as well. And then for Apple, we have the stop loss put at 10%, also rallied higher with the market. And CoinBase, after these incredible news, we have put the stop loss at plus 31%. So well done if you got into this. And please comment below. Do you have these kind of results as well? I mean, did you have the losses on Buffalo, but should be compensated with the results here from the VCA as well? So please comment below so we can see how it's gone for you there. Would be very interesting to hear. And the one stock as well we're adding for this week, because that's so much for the updates there, but the one stock we're adding for this week is CMCSA. This is a multinational telecommunication conglomerate. It's a huge company, global media and technology company with 3 businesses. So it is what we're looking for, a global company with many different product lines, and it has great fundamentals, and being down 36%, I think it looks like a great opportunity to get into. And they have a low debt, they have good earnings, and then good numbers like the return on investment, return on equity, and return on assets. So have a look at this, and with the VCA strategy, we think it looks interesting. So that being said, I think it's time to jump into results. Keith, are you excited?
I'm so excited, Dennis.
Really? Okay. Well, I'm happy you're excited. Me, on the other hand, not as excited, but we had a loss of 3.8% on the Buffalo portfolio. Remember, we had 2 gaps, minus 1%, but then also a plus 3% that evened it out a little bit to not make it too bad. So we're up a total of 59.4% of the total portfolio. On VCA, hopefully next week and the coming weeks, we will be able to lock in a lot of profits on that, which is nice. The same with CCA and small cap. So that being said, everyone, I really hope you enjoyed the trades of the week for this week. And do not forget, right? Do not forget to join our private Facebook group if you haven't. Links below to get exclusive content from us. You will get weekly market live updates. You will also get the trade of the week and also the crypto of the week to do your research on. So we'll support you on your journey. So make sure you join now and click the link below. And also, if you enjoy this content, make sure you click that subscribe button and also the alarm bell to make sure you get those notifications whenever we're posting a video. So you will be the first to know whenever we have an update. So you know what's going to happen, hopefully, next in the markets. And also, like the video if you like what you're seeing, and also comment below. What would you like to see? And comment below as well, what results are you getting? Very important so we can support you on that journey. And from myself, Keith, the whole team, we cannot wait to see you on next week's Trades of the Week.